Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa with the market recap for Cold Week ending November 8th, 2019. Today, Friday, was the November supply and demand update. Some anticipation coming into this report, and it was basically a fairly quiet scenario. The gist of it was the USDA dropped the average corn yield nationwide 1.4 bushels, and that equates to about 119, 120 million bushels nationwide. Same point, changed demand, lowered demand 100 million, namely on the ethanol and export side. Thus, a total change in carryout of a lowering of about 20 million bushels, which is pretty minimal. The market initially firmed up on the acreage, or excuse me, not the acreage, the yield number. No changes were made in acreage at all. And then when the market looked more at the demand sector, things kind of settled down as we closed a little bit higher on the day. The bean report was lowered 15 million on the crush, which actually increased bean carryout 15 million bushels. So for the week, we ended with corn down 15 cents, beans down 5, wheat down about 5 cents. Cattle market, which has been the stalwart of the ag sector of late, was steady to down a little bit for the week. Cash steady firm, but cattle market in the last 6-7 weeks has been on a pretty good run. As of this past Tuesday, bullish consensus showed cattle as the highest valued commodity in regards to bullish consensus at 70%, and I believe the corn was the lowest, right down around 30%. This afternoon, Commitment to Traders report came out. Funds added to a short position on corn. They're short, give or take, around 100,000 contracts. And they lowered their long position on soybeans, but the market's still long roughly 60,000 contracts. So the fund is short corn, long beans, and basically neutral on the wheat. A few other factors, the U.S.-China trade talk, this phase 1 proposal that's been talked about here over the last 2 to 3 weeks. The ebb and flow of that this week has been interesting, as it looked like there was going to be some phase out of some of the tariffs, and then the White House mentioned today that is not necessarily the case. The market's still anticipating or waiting for a time frame and a location where President Trump, President Xi could or would get together to sign this phase 1. So not only the equity markets watching this closely, so are all the commodities. Seasonally, once you're through this November crop report, especially in the last 5 years on the corn, and keep in mind the carryout or the supply and demand, pretty similar what we see on paper today versus the last 4 or 5 years. We tend to drift a little bit lower into about Thanksgiving or deliveries against the December contract, and then it's kind of a flat line through most of the winter and the spring. So we'll see how that progresses. Now, harvest progress this year has been unprecedented in many, many ways, from the spring all the way through harvest. Obviously, the late spring brings on a late harvest, and not only are we seeing issues with wet field conditions now turning very cold next week, that could add to some of these issues, if you will, and then pile on the propane issues, shortage, if you will, and the cold weather with natural gas and a wet crop. That all combines into another reason to add to the delays or the lengthening of this harvest season. Because of that, the cash market, or the basis, continues to be historically very strong. We have seen basis levels back off some this week, especially in the domestic market, in some locations, especially in the western Corn Belt, Nebraska, parts of western Iowa, as they've seen, in general, very solid to very good crops, and harvest has come along at a pretty good pace. As you move east, a lot more radical Harvest activity, people trying to finish up soybeans. Basis levels have backed off some, and it's a general, but still continue to be historically very high. Keep in mind, even though exports for corn continue to struggle in a big fashion, we are seeing a pickup in the basis along the river, especially in the mid-upper Miss, as we're down to the last few weeks as far as loading ability off the Miss. Corn exports, as I mentioned, Argentina, big crop last year. The Argentine farmer seems to be aggressive in forward contracting quite a bit of corn in the crop they're planting right now or half planted. We are still not competitive against the Argentine market. FOB values from the Gulf versus FOB values out of Argentina until we get into February or March, which is a little later than normal. So that is not a longer-term good sign for this corn. And also keep in mind the Black Sea has been a very competitive market with the U.S. on feed grains. If you have any other questions on any of these markets, feel free to call us at the office here in Cedar Rapids. Phone number is 800-373-2525, or catch us on the web at BIScommodities.com. With that, we wish everyone a warm and safe weekend.